Well, thank you, Lisa. I'm excited to be here today.
We're super excited to have you. And while I know you have written your own Profit First book with Mike Michalowicz for minority business on enterprises, I want to talk to you a little bit about Profit First today, but I want to talk to you more about what it means to be a fractional CFO, because this entire season is really about having the right advisors in your business. And I think a lot of business owners think that they just need one person who can do everything for them. And so I'm trying to show people that you need more than one person to help guide you in your business. So having a fractional CFO is kind of a new thing for people. So could you start by just telling us what is a fractional CFO?
Absolutely. So, first of all, Lisa, businesses go through different stages, right? A business that's just starting up has very different needs than a 7, 8 figure business that might be even planning to go public one day, right? And so you should have an advisor for every stage of your business. If you're just starting out, just getting somebody to say, "Hey, I just want to be able to sleep at night and be in compliance." That it's okay that you hire your CPA to get you started, right? Or get you started on that financial reporting, that bookkeeping. And what a fractional CFO is, it's a little bit different. It's really that step up. And I always say it starts around, when you first hit that million, definitely when you're at that 2 million or more. And usually right before you're 50 million, right? Because at 50 million, at that point, we typically are recommending that it's time that you bring home your own internal team, right? Your own internal fractional, or actually CFO that's there full time for you. So I would say anywhere between 1 million to 50 million is a sweet spot for a CFO. And usually what that looks like is you are in hyper growth, right? Meaning that you are adding people, you are scaling, you are going different places. You may have desires to have multiple locations and they need to be systematized. You may be ready to even consider going public or bringing other investors, right? Might
Mhm.
be where you're at. And really that's where that fractional CFO comes in. It comes in from the point of, how do I scale profitably? How do I scale in a way that, we've all learned you can hit 7, 8 figures and still not be profitable, right? And having revenue is not necessarily, you know, a predictor of success, right? It's that bottom line. And
Mhm.
so what we do is we work with our entrepreneurs and we go, okay, well, how do we make sure that you are scaling profitably? And what systems need to be there? What automation needs to be there? At that point, a lot of our clients are bringing in their own internal accounting team. That outsourced bookkeeper just isn't there
Isn't
anymore
cutting
that
it.
they need. Exactly. You might need to have daily financial reporting. You might need to have someone that you can go, hey, we need to make this decision really quick. We need to course correct. We can't wait till 30 days after the end of the month to get our numbers. We need to get our numbers today. And so
Mhm.
you're ready to bring in that internal accounting department. And what a fractional CFO is going to do is they're going to train that internal accounting department. If that's bringing in a bookkeeper that works for you full time at that point, or your that accounting, building out that accounting team, that fractional CFO is going to help you build in those processes and really automate and really standardize those processes so that you can grow profitably.
So, for those of you listening, if you don't know what a CFO is, it is a chief financial officer. So, this is a fractional role, fractional being they work a fraction of their time with your business. So, it's less costly than if you are hiring a full time CFO. So, can you talk to us a little bit about the CFO's role or the fractional CFO's role in correlation to, because you just mentioned you still need a bookkeeper, you still need an accountant. So, what exactly does a CFO do then?
So, a CFO, it's really, the way that I approach it, it's a very customized approach. There is not one client that is exactly like the other client. Depending on the industry that they're in. For example, if I'm working with a construction company, at this point, once you're crossing into a million, couple $1 million, that job costing has to be very fine tuned, right? You need to
Mhm.
know, what jobs do I need to be doing more of, and what jobs do I need to be running up from when I get that request for proposal. So it's building in that
Not just
that
construction.
exactly. It's building in that job costing type of of accounting systems so that it's going to be able to do that, give them that decision, that information on hand, and also to catch that creep, right? So when materials are starting to go up, being able to catch, hey, my gross margins are going down, my cost of materials, my cost of construction is going up. I need to course correct right now and be able to build financial systems to do that. If I'm dealing with retail, right? Now is starting to automate that inventory system. Like, what is a process to make sure that I'm only buying things that I can turn over, right? That are
Mm-hmm.
going to sell. What are my hot moving items, and what type of a system will allow me to be able to track that inventory and be able to look at it? If I'm doing customization, if I'm doing a lot of customized type of work, right? Really creating processes that standardize, so that I'm not going to be the one that's going to be quoting all my prices, right? Eventually I'm going to have team that's selling for
Mm-hmm.
me. So how do I create, pricing calculators that automatically calculate the price so that if you go to person A one day and then 2 days later you come back and get a price quote from person B, we get the same price quote, right? And standardizing that process. So it really depends on what that client needs and really customizing that approach. And a lot of times fractional CFOs, they're going to come in specifically for a need. So if you have a specific need, they're going to come in for that need and make sure that that need is accomplished and that from a project standpoint.
Mm-hmm. So, why is it important for small businesses when they get to, the 1, 2 million and up mark to be thinking differently about the financial side of their business and to be considering bringing someone with experience like yours in to help? Like, what are some of the financial benefits that they should expect by making that type of an investment?
So, it's interesting because, when I meet a lot of 7 and 8 figure entrepreneurs, one of the things that always makes me laugh, right, is I find that they bring in a lot of those habits that they started when they were starting off their business. And what that means is, they may have went to their first accountant and they may have told their first accountant, whatever you do, I don't want to pay any taxes, right? And what'll happen is, December 31st is getting close, they're getting itchy, they're like anticipating all these taxes they might owe. And then suddenly they're like going on a shopping spree. They're going out and buying filing cabinets they didn't really need. You've got doctors' offices going out and buying heavy vehicles when they don't need to drive anywhere, right? And they're doing it because they're wanting to cut Uncle Sam, right? They're and what's happening is they're cutting their own ankles as they're doing it. And, what makes me a little bit different than your typical accountant, Lisa, is, we subscribe to the financial or the cash management process called Profit First. And so with each and every one of our clients, we're building in a profit first model, which means literally teaching our clients to take their profit first. And we do it with through the use of bank accounts. So you have cash that's coming in to one bank account, and immediately we're allocating a percentage of those revenue receipts to the profit account. So we're creating intentional profitability day one. We're also allocating money to owners pay, right? Because we want them to immediately, you're your MVP. When
Mhm.
the day that Lisa Lardo walks out of that company doesn't exist anymore. So we're paying the owners pay. And then, of course, the other side is if you're driving that Bugatti, you're going to have an obligation called taxes, right? That's just the other side of success. So we're going to reserve for taxes because we don't want you standing there around the corner in 2024 going, how am I going to finance last year's taxes with this year's money? We're going to be prepared. We're going to use some tax strategy to mitigate that risk, but we're going to be prepared. And then whatever's left over, that's reserved for operating expenses, right? Operating expenses, what's happening is we're creating this illusion of scarcity, meaning that, you know, instead of feeling like I have
I love
plenty,
that.
I now have a smaller bucket. So that's what makes us a little bit different
Can
from
we
a
just
fractional.
double click on that? The illusion of scarcity. That is a really powerful term if you're listening, because what I see happen all the time, and I'm sure you do too, I'm not a CFO, but I'm a numbers girl, is people mistake cash flow for profit and they spend their cash flow. And then when they need money to pay their taxes, they don't actually have the money on hand because they've spent it. So I love, I've read Profit First, and I have to tell you, I've been one of those people who's poo pooed all the different bank accounts because, it seems like a lot of work. However, when you talk about that illusion of scarcity, it just brings it all into focus because when you think you don't have a lot of money, you act different. You really do.
Exactly. Exactly. And, I like to compare it to the dieting, right? When you first go on a diet, the first thing they tell you is use a smaller plate, right? And they tell you to use a smaller plate because you're gonna eat less food, right? Like, for example, if I go to Golden Corral, right? I don't like to confess that I've been there, but when I go there, I've never left Golden Corral proud of myself. In fact, I'm like, I'm doing the walk of shame as I'm leaving, all right? And it's because there's plates in the middle, plates on the right side, plates on the left side, dessert bar, there's salad bar that isn't even healthy, and like an array of pizza and like everything else that you can possibly imagine. But now, Lisa, when you and I go to an order of dinner, right, they give us 5-inch plates and we're going to eat a lot differently, right, versus Golden Corral because we've got a smaller plate, right? It's dainty, there's social pressure, and that's the same way it is with entrepreneurship. The bigger the plate, the more we're going to eat. And so we're going to create that illusion of scarcity so that we spend less money.
Hmm. Yeah, I love it. I never thought of it that way. I really, 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 really like it. So, talk to me about some of the biggest financial mistakes that you see business owners make. I love what you just said about carrying habits forward from when you first started. So, I think that's one really powerful mistake that business owners make. What are some of the other big financial mistakes that people make?
So the next thing that I see, and again, this is all built from the habits that we're carrying forward, right? Is not creating processes or reporting, really financial reporting that gives you the information that you need at the tip of your fingers, right? And what I mean by that is maybe, you've got away so far with just getting a P&L at the end of the month that's lumped with total revenue and then all the different expenses. But as you're scaling, especially when you're scaling rapidly, you need to know fine tune what's working, what's not working, right? So maybe I still have that P&L, but now I'm going to break it out, right? I'm going to break it out by divisions. I may be breaking it out by product line, right? Because I'm looking for something called Pareto principle. I'm looking for something called the 80-20, where what's 20% of my energy, my time, my money is producing 80% of my profit, right?
Yeah.
And I want reports that are going to spell that out and tell me in a quick second what that Pareto principle is, right? Whether it's a construction job, whether it's a retail line that I need to be focusing on, where do I want to put my best effort in order to not have be spinning my wheels, right? Spending my energy on non-profit, right? Not revenue, non-profit producing activities.
Mm-hmm. And what do you see as being some of the biggest opportunities that people have that they don't even realize are there?
So, in terms of opportunity, there's a tons of opportunities too. With that, because first of all, once you know what's not working, right? That's not producing your bottom line. You can get rid of it, right? You can get rid of it. You can sell that opportunity to somebody else. That may be the biggest blessing for them, right? So that you can focus on really your zone of genius and really becoming known for that. The other mistake that I said I'm going to kind of go back a little bit, Lisa, is really employing the wrong tax strategy too, right? And I know that you've had like tons of tax accountants on, so I don't want to repeat to any of your listeners what things that they might be missing. But, again, those early habits, right? Those early habits of how do I cut my taxes and spend? The person that you want to be working with, right? Your fractional CFO, you want somebody that thinks holistically, right? They think beyond, your traditional accounting. And so from a tax perspective, again, I'm thinking from a profit first perspective. Like, how do we build your net worth? How do we
Mhm,
build your net worth without increasing your expenses? So if I'm a scaling business, right? And I know that I make more profits when my people get better at their job. And how do people get better at their job? They do it longer, right? I increase my retention rate, right? And so what that might look like is how do I incentivize my team members to stay with me longer?
right.
And so maybe one of the things that I might do is I'm going to create a retirement plan, but I'm not going to create any retirement plan. I might not even create a safe harbor retirement plan. I might create something that specifically really caters to longevity. So I might say, hey, you got to be with me for 6 years. You got to be with me for 6 years before you vest in my plan. I'm going to get a tax deduction because every year I'm contributing to your plan, but that's not really yours until 6 years. And so what's
Mhm.
going to happen is now I'm competing with the big guys, right? That offer great retirement plans. But for you to fully benefit, you got to invest with me. You got to stay with me longer, right? And if you're
Mhm.
lured away by the lights of my competitors, right? And that dollar extra more an hour that you're making, what's going to happen is, you know, you're going to forfeit those contributions that you're not vested in. Now, I still got a tax deduction, right? All this time, but you're going to forfeit. And what that means is if you forfeit, right, that money stays in the trust. And usually at the end, right, if I don't use it for other contributions, the last one that's standing just going to be able to get that money, which by the way is going to be me because I own the company, right? So
Right.
again, what I'm doing is I'm winning no matter what. If you stay longer, I just got more profits because you just got better with your job. If you leave me, right, then I just
Your
built my net
payout is
worth.
better. Mhm.
Exactly. So I'm thinking strategically of how do I use tax law in order to create that profitability and create the goals of my company, right? It's
Mhm.
another thing that I'm thinking about from that standpoint.
One of the things that was interesting to me, because I mean, I'm Canadian. Now I have a US subsidiary company in Canada. It's a corporation. So I think it's a C Corp because it's owned by the Canadian company. But one of the things that I found interesting in Profit First was how the book talks about paying yourself, but having the business pay your taxes. How does that work? Because if the company's paying your taxes, do you not have to pay tax on that income that the company's paying your taxes on? So it's like
And
if I earn $1,000 and I keep it, and the company's got to now pay, $100 in taxes for me, for example, don't I now have to pay taxes on the extra $100? Like I'm trying to, like, how does it work? Can you explain that?
yeah, so that's where, Profit First is what I call a cash management system. So it's not an accounting system. So guys, please don't go to your accountant and be like, I just found this amazing accounting system. Your accountant will lose their hair. Okay. So it's a cash management system. It's simply a method to manage your cash, is what it is. And like I mentioned earlier, Profit First, we're putting away money for taxes. We're putting into a tax account or a tax hold account. So that money is there for us at the end of the year. But what should be happening on the accounting side, on a tax side with your CPA or your fractional CFO, if they're also a tax accountant by background, is they should be giving you quarterly estimates. So they're giving you quarterly estimates and you're going to be able to pay that from the tax account is what that money is for. Now, we do get a little bit more sophisticated with some of our clients. We do things like reasonable comp studies and that type of thing. Um, see what makes sense from a Social Security Medicare standpoint. But, you can do something called a net to gross calculation. But again, that gets a little bit more complicated. And so the easier way is to say, just put that away towards your estimated taxes is what I would do. And then
Okay.
again, you're using tax strategy, right? With your CFO, you're doing tax planning throughout the year. And if you do it right, you're not going to use all that money unless you're in California or New York, right? Those are the exceptions for those super high tax rates. That's something else to think about is where you
Mm-hmm.
located, right? Because depending on where you're located, you're in Florida or like Lisa or Texas, Florida, you can probably disregard that flow through entity tax, right? If you're in Florida. But so it's a lot of deciding really on, it's using tax planning, whatever's left over at the end of the year, that becomes the bonus to the owner.
Right. Okay. So it's not really that you're not paying taxes, it's that the net is going to you and the amount that is supposed to get paid in taxes is going into the tax file or the tax account. And then that tax account is just because, like, for me, I process payroll through ADP. So ADP takes care of all the taxes the moment the payroll is run. And when I read the book, I thought what they were saying is if you pay yourself, I'm going to use $100,000 a year, you keep 100,000 and the business pays for the taxes that you should have paid on the 100,000. That's what I thought. Did I misunderstand?
I think you got it in some ways, but it's really there. It's your gross is going to be including your net pay plus your tax account. So your owner's pay plus your
Right.
tax account plus your profit. That's your gross earnings, your
Okay.
adjusted gross income on your tax return for those of you guys in the
Okay.
US.
All right. And if we have listeners here who are not paying themselves, I know that sometimes people feel guilty about paying themselves. I spoke at an event recently and I asked all the business owners to please raise their hand if they had ever not made payroll for their team. And not one person raised their hand. And then I said, please raise your hand if you have ever not paid yourself. And 2/3 of the room raised their hand. So, what advice do you have for business owners who struggle to pay themselves? It's a real thing out there.
It is. And it's
It's
so
not for me
deep.
because I would be just like, there's no way I'm doing that. I'm gonna get a job. There's no way I'm not paying myself. But I
I'd
know it's a
quit.
reality. Yeah, I quit. There's a reality for a lot of people.
And you're absolutely right. And it's such a deep rooted question too, because there's so much psychology behind it. I mean, there are people that, they're, and I get the need, the want and desire to do good in the world, but to the point that it actually hurts themselves, right? Or they get stuck in that thought of, I just need to keep reinvesting in my business, right? And the
Yeah,
problem
that
with
is so
that is,
lame. The reinvesting, my ass, you're reinvesting. You're spending your profit. That's not like, show me how you're reinvesting because I hear that too. It's like, bull, you are not.
because right, every level is a new devil. Every level needs another investment because there's always more revenue to be made, right? And so if you don't decide that today I'm going to be profitable, you will never be profitable, right?
Mhm.
And I think I see that too, in probably 90% of small businesses out there, that cutting of the ankles to build a better tomorrow, which tomorrow is a floating target, right? But it really starts with, for me, what does winning look like? Like, why did I start this business? Did I start this business to work all the time? Did I start this business to create a different legacy for my family, right? And most of us started our business because we wanted to create a new legacy for our family, right? We wanted to build something that we could never get working for a W-2 job. And it really is taking that step back and going, what does winning look like for me? Why did I create this? And then aligning those actions with the why. And part of that is your payroll. When you look at yourself, you are the lifeblood of your company. That for many of us entrepreneurs, even if we've got team, this company started because of ourselves. And just like you wouldn't pay your team member, right? Your MVP, you would never ever want to not pay yourself. So definitely starting with why, like Simon Sinek says, and really aligning the actions with the why is really what it comes down to.
Yeah, I think people should just put themselves on payroll and make it come out automatically and not have a choice. Like I think that if you're not paying yourself, you need to reevaluate your business because and actually, you know what, I'm going to take that back. I didn't pay myself the first 2 years that I owned my retail business, but I didn't pay myself intentionally. When I left my corporate job, I had stock options that had vested, and I took that money out, and I had enough money in the bank to not pay myself for the first 2 years because I knew that the first 2 years of building a bricks and mortar retail business was going to be challenging to do. So I did it intentionally. But then, when I got to year 3, I put myself on payroll and I started to pay myself. It was, part of the plan in the beginning was to do that. And I still took distributions when I wanted to. But I think that there's a difference between choosing not to pay yourself when you're in startup mode versus not being able to pay yourself because you're not managing your money the right way.
Amen to that. I absolutely agree. And I want to bring out something too. And this is where it's important to really know your industry and your type of business. Um, certain businesses like a retail business, like the one you were starting, Lisa, there is a startup cost, right? You have to get that lease. You have to build out those shelves
Mhm.
that are part of that infrastructure.
And buy all
And you
that
have to
darn inventory.
you got to train your employees before you even open the door, right?
Mhm.
And then you're learning to even attract clients, right? Now that type of business has an initial setup cost, right? And so that type of business, you want to set aside something what I call a seed budget, right? Like how much money needs to go into creating that business? Like how much, if it was a terrible year, do I need to have money set aside? But not just how much money do I need to set aside? I'm creating a budget for this business, right? Like these are my first 3 months that I might not be breaking even on these first 3 months. This is the employee
Mhm.
costs that I'm expecting to spend. And so what's happening is when I'm seeing myself exceed my budget, I'm starting to make decisions like maybe I need to be backing out the door, right, with this idea, or I need to change something really quick and pivot. So really creating that seed budget is extremely important. Now, if I'm in a consulting type of business, right, a business that doesn't have a brick and mortar, maybe a home type of office type of situation, my excuses for not being profitable go down pretty drastically, right?
Yeah.
Year one. And so really
It's the
understanding
difference
your
between a
industry.
Pottery Barn desk and an Amazon desk.
Exactly, exactly. And so it's really being realistic about your business too, and setting goals like targets. When do I expect to break even?
Mhm.
And that should happen quicker in a service-based business that doesn't have a lot of inventory costs and initial investment to ramp that up.
Yeah, absolutely. So let's talk a little bit. This is my last question for you. I want to know what you think the number one reason is business owners struggle to make and keep profit. I'd love to chat about that because I have my own kind of beliefs around why people have a hard time making and keeping profit. But I'd like to know from your perspective what you think that is, or what you see, not what you think, like what your experience has been.
So I think it's different for different levels of business. I think for startup businesses, it's because they never learn to sell, or they never learn to sell the right product or right service. That's really gonna, I call that Pareto principle. They never find that right Pareto that's gonna lead to the results that they want, right? They're still learning how to sell. They don't know how to have that conversation in the wrong product line. Completely different issue than a 7, 8 figure business.
Hmm.
And a 7 and 8 figure business, when you're failing to achieve revenue, it's usually because of not having the right infrastructure. So not having the right team members that can, first of all, to get to 7, 8 figures, you have to have you as the owner know how to sell, but maybe you don't have that framework to teach others how to do it independently. Maybe it's a compensation plan is not really incentivizing people to generate sales, right? From that standpoint. And so we have to look at that. In terms of profitability, and I think the profitability issue is probably the same for both the small startup as well as the 7, 8 figure business in some degree. It's not really being intentional about profitability. That's the number one thing that I see. The
Hmm.
one thing that I like about Profit First is we set aside a percentage, right, of revenue that's going to go towards your profit, right? So the more revenue you make, the more profit should be increasing, right? I see a lot of business owners, they start out with $100,000 salary when they're $1 million, and then when they're 50 million, they're still paying themselves $100,000 salary. And I'm like, shouldn't that be growing also with that? Because your revenue's grown, you should be sharing in that wealth and that success that you created for your company. And so again, I like Profit First because we set aside a percentage to for you, and that means that your salary and your profit are going to be growing as your business grows, and then you're creating infrastructure to make sure you hit those targets.
Hmm. I think that I agree with everything you said. And the one thing that I would add is that people don't know how to price for profit. They don't understand what it costs to operate their business. And because they don't understand what it costs to operate the business, they tend to make pricing decisions based on the cost of the widget or the cost of the hourly person. And, in retail, for example, when I owned my wireless store, I could buy a car charger for a cell phone at wholesale for say $3.75, but I sold it for 30. And the reason that you sold it for 30 and you didn't just sell it for $6 is because you had rent to pay and you had, all these other things that you needed to pay for. And the same thing is true in a service-based business. If you're not, assuming you're not just a solopreneur, but you have employees and you have, technology and things that you pay for in your business to run your company, understanding what the average cost is per transaction can help you to really figure out what your pricing should look like so that you have enough profit margin. I will tell you, in my career, traditionally, what I've done is I've tripled my prices. So, if, for example, the person who's doing the work is going to get paid, say, $50 an hour all in, and I'm going to charge 150 because I'm going to say, okay, a third of it is for the person doing the work, a third is for the operations of the business, and a third is profit. And I thought that was pretty aggressive until I started reading some books written by some male counterparts, and they actually 5x the number. They don't 3x it, they 5x it. And I think it's really important, ladies, if you're listening, to pay attention to what the boys are doing, because the boys are not worried about making the price too high. Recently I had a conversation with my team because they quoted a project for somebody, and they quoted the project based on a set number of hours that they thought that it would take to do. And our team got it done really, really fast. And they're like, oh, I feel bad because I think I overquoted this person. And I'm like, are you kidding me? How many times do we quote a project wrong and we're over budget on the project? And we have one instance where we quoted the client a price, they agreed to the price, they don't know how long it took us to do it. Externally, the client is super happy with the work that we did and the deliverable and the speed at which we did it for. And now internally, you feel bad.
I know. It
That's the
always
kind of
surprises me.
psychology that goes on that I think prevents people from being able to actually build a profitable business. We feel bad. Oh, I can't charge you that much. And there you go. You're impacting your own ability to build a successful, profitable, sustainable business. Business can't stay in business if it doesn't make money. It can't.
Absolutely, Lisa. And I agree with you. I can't tell you how many times I've heard people tell me that, like, the market won't allow that. I'm like, well, differentiate yourself, give the market a reason to buy from you. And it is a common excuse, and that's the reason why it's important, like you said, to know your numbers, have that accounting system that really tells you, this is my gross margins, right, this is my operating expense, because you do need to know break even, right?
Mm-hmm.
And and you do have to do target pricing in order to figure out, okay, once I know break even, this is how much I need to do. And then we can get even more complicated with fixed versus variable costs, because your fixed costs may end up changing as you grow and scale, right? As well as your variable costs. You might need a bigger warehouse
Mm-hmm.
as you grow and scale. And so having that accounting system that really gives you those numbers and having that customizing, because every industry is going to be different, right?
Yeah.
Is going to be really important.
Yeah. So if you're listening to this, there's a couple of things that I want you to know. You need to have the systems that give you the numbers, but you also need to be brave enough to learn how to interpret the numbers. There's a lot of people that use, a lot of women that I know. I'm sorry, I'm calling you ladies out today. There's a lot of women that have told me over the years, oh, I'm just not good with math. I'm just not good with numbers. And I say that's just not good enough. If you want to be a business owner, then you need to get good at the numbers. You can't use that excuse as a reason for not understanding your numbers. If you have a bookkeeper, a CPA, or a fractional CFO, or a decent business coach, they will help you learn to understand the numbers. The hard thing is doing what's right once you understand those numbers. So I'm going to go back to where is it that you don't like to eat because you don't feel well?
Oh, Golden Corral.
Golden Corral. So if every single tablespoon of food that went on a plate had a calorie counter beside it, and you knew how much you were consuming in terms of calorie and fat that day, you might choose not to have the second serving. You might choose not to have 3 desserts. You might choose to have 1, because the numbers don't lie and you now know what you're doing. But when you go into one of those buffet lines and you just load it all in like you're eating plates of salad because you're not actually looking at the true caloric intake, you make different decisions. It's no different in your business.
Exactly. I always say this, the best time to have implemented a strategy like Profit First was obviously 10 years ago. The next best time is today,
Yeah.
because the reality is, every time you forfeit profit, you forfeit opportunity cost to build your future.
Yeah. I couldn't agree. I couldn't agree more. And I actually think I'm going to open a second bank account for Profit because I'm a pretty good cash flow manager. Like I do a good job of managing cash flow and accumulating cash flow in my business. But I just like the practice of taking it off the top and forcing myself to operate with less money in my bank account because I've done that. And so that's something I'm going to carry forward into the new year and start to do in my business. So thank you for the reminder on that. That's good, really valuable. All right, Suzanne, it has been wonderful having you here today. If you want to learn more about Suzanne, you can go to marigagroup.com, and I will also have all of Suzanne's links in the show notes so that you can find her there. Thank you so much for listening, and I hope that this episode really gives you lots to think about in terms of how you start to plan your business next year so that you can have your most profitable and most successful financial year in business yet. Thank you so much, Suzanne, for being here. This has been great.
Thank you, Lisa, for having me.